Happy New Year everyone and welcome to our first video of 2023. 2022 has been one of the worst years in history, second to 2008, which sets out the stage for an exciting 2023. We are anticipating a recession. There's high anticipation actually for a recession in 2023, which will result to the Fed having to pivot and cut interest rates and perhaps lead to more economic stimulus, which will lead to more inflation, guys. So this is definitely going to be an exciting year in the stock market. If we are to look at what has happened in 2022, guys, we've had, as I mentioned before, one of the worst years in history after 2008. And you can see this candle here. We completely wiped out the gains from 2021, and if we are indeed going to get a recession, we may get more weakness here this year. So definitely a lot of things to discuss in today's video. We've opened 2023, guys, with a big gap here and with a lot of strength. It's exactly what happened last year, so there's something that we need to go to. Exactly what happened last year that may happen this year as well. So a lot of things to go through in today's video, guys. If you do enjoy the video, please give it a like and share it with anyone else that may find it useful. And if you are new to the channel, please consider subscribing. We will bring the latest stock market analysis outlook every single Monday throughout 2023, so stay tuned for that. Now, as I just mentioned, guys, we opened today, the 3rd of January, Tuesday, the 3rd of January, with a gap here, with a gap up. We fill the gap and now we're going higher. A lot of green on the screen, a lot of strength in the stock market. Now, if we have to go back a second and look at what happened last year on the 3rd of January 2022, can you see this candle here? We've opened with the gap up, we filled the gap, and then we went slightly higher. And what happened straight after that, the second day? A massive crash. There was a lot of optimism up here that we're going to have perhaps new all-time highs, that will carry on going higher and higher and higher, and that was immediately punished, okay, with a lot of weakness in the stock market. So guys, I'm not saying this will happen again today. We've already dropped a lot, but be very careful, okay? We still have high interest rates, we still have high inflation and economic weakness on the way. So there's nothing positive as of yet. If recession indeed comes, we'll see even more weakness, and then if the Fed pivots, we'll see even more weakness, because they have to pivot, not because inflation is lower, but because of the recession. And when they start stimulating the economy, that's when we will start to see real strength in the stock market. However, that will lead to more inflation. So again, more weakness on the way after that, but we'll get there. We'll discuss that when we get there. For now, just be very careful for today, guys, okay? We may see even a day or two of green on the screen, green candlesticks, and then boom, a lot of weakness and perhaps new lows for the year and for the stock market in general. So be very careful on that. In terms of this week, guys, what to look out for, we have a lot of important news announcements are coming out this week. First of all, on Wednesday, we have the FOMC meeting minutes at 7 p.m. UK time, and then more data on Thursday. Okay, we have the administrative jobless claims here and the ADP. Not market moving, I would assume, but still keep an eye on that. And then on Friday, guys, very important, we have the non-farm payrolls. Okay, we are looking to see if the economy is going into a recession or not. We need to start to look for hints of that happening, and one hint will be a lot of not a lot of jobs added, or perhaps negative jobs will be the economy has actually taken away jobs in the US. So keep an eye on that. We have a 200K forecast. If we get less than 100K or negative, that will be very negative for the stock market, guys. Okay, just means that we are heading into the recession. Also keep an eye on the unemployment rate. Okay, if the unemployment rate ticks higher, okay, that means that, again, the recession is on the way. A lot of people are losing their jobs, and again, that is negative for the stock market in the long term. Now let's head over to the charts and start off by looking at the US 500, guys. And what I'm looking for here, again, as I've mentioned, we open with a gap up, we fill the gap, and now we're going higher. Now, if we have to look at this 4-hour time frame, we've been consolidating here for the last couple of weeks. So nothing really happened here. We were in a massive range. We were in a big range over here. We did consolidation. We've managed to break this consolidation down. We went lower, and now again we are consolidating. There's two things that I'm looking for. Well, there's a couple of things that I'm looking for actually here. So I'm looking at the 2-hour time frame here, okay? And what I'm looking for in here, I'm looking for the stock market, the price to rally, to go higher above the upward expected move for the week and into this 2-hour I see here. And that should be a nice opportunity for us to go short. If we see some consolidation here, then we can go short and target the low. Again, that seems to be the case as it stands. If we go higher and manage to go above this, okay, there's no consolidation, go above this, okay, then we may be retesting this trend line here, guys. We may go up, retest this trend line, and if we just go zoom in for a second, we have this daily IC here, okay, from where all this downward movement has started from, and it's around 3980 or so. So if we do go higher, okay, if we don't respect the 2-hour IC, just monitor this area here. And if we do manage to go above this and break the trend line, then again we will be going higher. I doubt that would happen, but you never know. Anything is possible in the stock market. And if we do go lower, guys, then all I'm targeting here, guys, simply new lows in the stock market, new lows on the S&P 500. Simple as that. So just monitor that and see for this week. Next, we get UK 100, and the UK 100 here, guys, is simple. We've managed to, so we had a great reaction out of the daily, this 1-day IC here. Beautiful reaction. It went lower, had a nice reaction. The second reaction out of this daily IC here, and now we are back retesting this daily IC here. Now the UK 100 has had a lot of strength in the last couple of months, guys, and if we are to look at what we're expecting, well, to be honest, there's a lot of liquidity resting here and resting here. So I wouldn't be surprised for us to go and clear the liquidity here and here, and perhaps go to all-time highs. That is a strong possibility, guys, so watch that out. That is indeed the case. If we do start to see a lot of consolidation here and a move down, then what I'm looking for us to go below this daily IC here. And if we do manage to do that, there's a lot more weakness to come. So monitor that for the next couple of weeks, guys. Next, we get the Germany, the DAX 40 here, and it's a similar situation here, guys. We managed to break, we had a consolidation here, we managed to break this downwards here, and we've been consolidating here again. Now, there's a couple of things I'm also looking at here, is that this is mainly this daily IC here. I'm looking for price to have a reaction out of this daily IC, some consolidation here, and perhaps new lows here. And if we do see that, then I'm targeting this daily IC here in and around 3,135 or so. So And if we have to look at again, guys, we've been consolidating for the last couple of weeks. We do have, okay, similar at that daily IC. We have an 8-hour IC here, guys, in and around 14,370. So if we do get here, consolidate, that will be a nice opportunity for a short, and we short until at least 13,000. We can use the 8-hour time frame and go to 13,170. At that point, I feel this IPA here, so it'll be a nice place to go long, perhaps short term. We'll see what happens. See what the economic outlook will be at that point. Okay. Next, we get US 30, and here, guys, what I wanted to show you here is that we've had our POS of the weekly here, and we are bullish. What I'm looking for in here, okay, if we are to see more downside, is I'm looking for the 20 and the 50 EMAs to be broken. If we see a candlestick closing below this, then there's more weakness to come, and there's more weakness in terms of us going all the way down to this weekly IC at 29,600 or so. Okay, so if we do see a break below this, the candlestick closing weekly below this, the 20 and the 50 EMA, expect more weakness. However, if we are to go and close above this, then we are going to all-time highs, no question about that for sure. Now, where do we stand on a lower time frames? Well, lower time frames, okay, we've just, as it stands now, we've just managed to clear the liquidity that was resting above this consolidation zone here, and we are heading, okay, into this daily IC here, which from where the movement down has started from. So if we do head higher on the daily here, we may start to see some consolidation here and take a short, and as a first take profit, just aim for perhaps the 30 to 160 or so, and then I'll have to review at that point if we do go lower. That will coincide well with the weekly time frame. We see where we close on there as well. If we are to go on a lower time frame here, guys, as I've mentioned, we've just cleared the liquidity there, and then at the moment we are just stalling as it stands on here. We do have a 2-hour IC here, guys, at 33,690 or so. So if we do go higher and consolidate here, then watch out for that, okay, because it just means that we went higher, we clear the liquidity, consolidate here, and then boom, down to new lows for the year and for the week and for the year as well. So monitor that for the week to come. Next, we get the US 100, and guys, here, I mean, this has been the weakest index out of all the US indices and the European indices. Now on here, guys, what are we expecting? Well, I am expecting new lows here in the near future, and we're not very far off that. We may see a bounce short term here, and guys, if we have to look at this 2-hour time frame for a second, so again, guys, we've been 100% spot on with the analysis that we've done on here. Just before Christmas, we managed to have a nice reaction out of this 2-hour IC here, and even a lot lower. Now we're starting to see positive divergences happening here, and guys, also we are seeing here an inverse, okay, an inverse head and shoulders, guys. And if we are to take the distance, take profit distance of this, then this is going to take us all the way up here to clear the liquidity that is resting above this consolidation area here. Now, if we are to look where we would like to take a trade from, okay, you can use this inverse head and shoulders, or we call this 2-hour IC here at 11,570, or we've got this 4-hour IC. If we do indeed go a lot higher this week at 11,850 or so. But there's two zones, two areas that I'm watching for a potential short. We may see a bounce this week. Today It may last even just today, and that's it. We may see a lot of weakness after that, or if we do see a continuous strength following today, then those two areas is what I'm looking to short from and aim for new lower lows for now. Next, guys, we get the VIX, and the VIX has opened with a gap up here. We may go down today and try to fill this gap. And watch out, if we do fill this gap at the beginning of the week, meaning today or tomorrow, then we may see the VIX rally. Guys, what I'm looking for on the VIX here is I'm looking for us to go above the 25 level. You can see that in December we struggled to go above 25. We went above 25 here and then immediately went down back below 25 and 20 to 20 level. If we manage to go see a close above this and then continuation of this, then that will put a lot of pressure on the S&P 500 and on the stock market in general. There will be a lot of fear coming into the market, and at that point there's nothing stopping us from going all the way up to the 35 level. Okay, we need to see us going to the 35 level and above 35, perhaps 45, 50 level to see that capitulation, and that is where we are looking to buy long term, guys. So keep an eye on this, keep an eye on the VIX for to come. Next, we get the DXY, the dollar index here. And guys, here we've been consolidating. It's been quite a boring trade. We've been consolidating for a number of weeks here. It's nothing, actually nothing's been happening here. However, today we are seeing a lot of strength in dollar and a lot of strength in the stock market. Which one is telling the truth? Which one is lying, guys? Very important. In my opinion, I think the dollar here is telling the truth, and the stock market is just a way to induce a lot of buyers before the next big drop. What I'm looking for here, monitor, well, we are at this trend line here, at this weekly trend line. What I'm looking for here, I'm looking for us to regain this 20 weekly EMA. If we manage to close the week above and then close above the 20 as well, we may see more upside prices for the DXY. If we manage to reject the 50 again and close below it, and that's it, guys. I think we see more pressure on the dollar here. So those are the things I'm looking for from a weekly perspective. From a daily perspective, guys, I just want this daily IC here to hold. I don't want to see close below this and a continuation, because if that happens, okay, there's more downside pressure to come. And as a first target, we target 109,600. We target this IPA fill here and this daily IC here. Next, we get gold here, and guys, we've been on gold here. We've been just grinding higher and higher and higher for the last couple of weeks, where the dollar has been simply consolidating. Now, we did mention that if we do close above this zone here, then I'm targeting this liquidity here, this liquidity grab here, and this daily IC here in and around 1940 or so. Guys, this is going to be very important here. We may see strength in the dollar and we may see strength in gold as well. So bear in mind that that can happen. Everyone is talking about the best trade of 2023, and it seems that the best trade of 2023 may be gold. Gold has seen a lot of pressure in the last year, so you may see more strength coming back into gold, especially if we start seeing a lot of weakness in the stock market. So as it stands, okay, I'm targeting this this daily IC here. Firstly, this liquidity grab and this daily IC. If at any point it close below 1736 or so, then that's it. We're going to retest the lows and grab this liquidity that is resting below 1612 or so. So keep an eye on that, guys. It's going to be a very interesting trade here. Lastly, guys, I'm going to talk about Bitcoin, and guys, there is nothing going on here. There's literally no volume being brought in, no liquidity coming back into Bitcoin whatsoever. may see 2023 starting a bit, with a little weakness, and we may see some more upside going towards the end of the year, especially if we manage to get more security and more security into Bitcoin, into cryptocurrencies in general. As we start to trust them more, perhaps they start to invest in them a bit more. As it stands, guys, there's nothing going on here, and again, I'm sticking with my target of 12,500, where we're potentially going to go long term. As it stands, there's nothing to do. We had a range here, we broke the range, we are testing the range here, and then we may go lower. Okay, simple as that. So let's see that for the next couple of weeks. As it stands, there's nothing to do on Bitcoin. That's it for me this week, guys. Thank you very much for watching. If you are new to trading and would like to learn more about the strategies and concepts that we use, head over to our website, mcitradingacademy.co.uk, where you can find out more about the one-to-one mentoring courses that we offer, and you can also join our Discord community for free. Thank you very much, guys, and I hope you have a great trading week.